Happy Friday and welcome back to Asia Business First. Well, in our C-Suite segment this morning, we're focusing in on one of the favorite topics I know you all love to hear about, and that is property, right? What else, well, other than shares? And who better to talk about it than the man who has had a successful IPO under his belt? And that's Propnex CEO, Ismail Gafoor. Ismail, great welcome to have you in our studio. It's good to see you, and congratulations on your listing.
Thank you.
You know, I want to get to, of course, the big macro themes in the property market here in Singapore, and that is the tightening measures that we've seen put in place, which in a way has shocked a many number of people. Did you expect that at all?
I think almost the entire industry did not really expect it to come so soon. The mere fact that we had a negative decline of property prices for 15 quarters, and we only witnessed some kind of a positive growth in the last 4 quarters. But what was not so comfortable, I suppose, to the authorities were a huge increase in prices. The first 6 months, we witnessed a 7.3% growth, and it was heading towards a double digit. That put a question, is it sustainable? And that's where the cooling measures came fast and furious, I must say.
Well, I suppose the government is a little bit concerned about where asset prices are going. If you look at Hong Kong, I mean, we don't want to repeat that scenario where prices are really running away, right? But from where you stand in the real estate industry, you know, what do you think will be the impact, the implications of these latest measures?
I think the immediate effect that we could see here is this event as recent as just 2 days back in some of the new land bids. The developers are exercising greater caution in terms of the land bid prices. And it was also quite certain without the cooling measures, the property prices were expected to go up a double digit. But what it favors right now here is this: with the cooling measures, sensitive pricing by the developers, especially the first timers, are getting a huge benefit from this entire cooling measures being in place.
Right, but can we paint the brush across the entire property space? I mean, is this going to impact all properties up and down the scale from ultra luxury down to the HDBs? Or will there be certain parts of the market that you feel might be insulated?
Definitely, if you look at it, public housing is relatively insulated for simple reason here is this, so any of these cooling measures does not impact them directly. In fact, we witnessed a positive, very, very marginal growth last month as far as public housing price index are concerned. Quite certainly, yes, the private property market and the luxury segments, because of the increase in ABSD to 20% for foreigners wanting to invest, may take a dent for a short period of time. But when we look at Singapore as a global city in comparison to Hong Kong, London, and elsewhere, Singapore still stands out as a very viable option for many foreigners to consider parking their funds and investing.
You don't think that the latest measures will divert funds away from Singapore to those other markets? I mean, there's been reports suggesting that Singaporeans, in fact Asians, have been plowing money, Singaporean companies, into assets in London because of the cheap pound and also property prices easing. So if these property tightening measures, you know, constrain the market here, won't that be a risk?
There will be some minor diversion of some people based on their bigger objective. But what we have witnessed here is this: even when we take it last year, one of the biggest buyers are from China. And it is a very big economy from China. And that demand still continues. But beyond the shores of China and Asia, generally Singapore properties, in comparisons to 5 years ago, because of all the tightening of the cooling measures in the past, prices have come down and it is very attractive.
One of the big things has been the HSR story, and we just got confirmation that both sides, the governments, have agreed on the deferment of this project with some compensation of $15 million. And we know, of course, Singapore has already planned for this ahead and plowed millions into the development in certain areas like Jurong. It's good that, of course, the two sides came to an amicable solution, but what do you think is the impact across this deferment on the areas that were most exposed?
The very positive outcome here is this: it is not totally derailed, or for that matter, it is just a mere postponement of 2 years. And overall, as far as the project is likely to be delayed by 4 years, in any big, huge mega project, such delayed activities are not unusual. And as far as Singapore is concerned, have protected in terms of our investment, in terms of a compensation. In the event it does not take place within the next 2 years, there are other instruments being put in place. Overall, as far as the West, Jurong region is concerned, the overall master plan has got many other activities, the mega port, the second CBD, the districts of the future in terms of commercial activities and shopping mall. And the HSR is only a small component which is not going to be impactful in a big way.
All right, well, that's good news. We've still got some signs of hope then for all those investors in the Jurong area. Ismail, it's a great pleasure to have you on the program today. Don't be a stranger. We'd like to see you again. That was
Thank you so much.
Who's the
My pleasure.
CEO of PropNext, talking to me here on Asia Business First. We're going off another break. Still to come on Asia Business First.